every type of investment has some level of a risk. There's no such thing as like a completely risk-free investment. That's really important.
Yeah.
Like even cash, people are like, oh no, I'll just put my cash. There's inflation risk, right?
Hey guys, welcome to my YouTube channel. If you're new here, welcome. If you're returning, welcome back. As you can see, I have a beautiful guest here, Jessica Morehouse. Jessica is a money expert, public speaker, accredited financial counselor in Canada, and the host of More Money podcast. Welcome on board, Jessica.
Thanks for having me, and also thanks for coming over.
Welcome. Thank you very much for having me as well. So today we are going to be talking about investing in Canada, and I brought Jessica here because I know she's the expert of money topics, and I want her to share all of the tips about investing with you. So Jessica, why do you think investing is important?
I mean, it is kind of the main way to grow your wealth, but also achieve whatever goals you have, right? Like those really big, lofty goals, retirement, going on like a trip around the world, maybe retraining to, go back to school after a second time, and most of us have, buying a house. We have to invest for those goals, right? You cannot just save cash in a savings account. So we have to invest our money so it grows, so we can get to a place where we want to be.
Yeah, I agree with you totally. I always tell people that you can't save into achieving wealth. You have to invest and invest in the right things. Now, whatever you invest in eventually is what would define if you build wealth, but you have to invest. You can't just save. No. That's never enough.
No.
What are some common investment types that you think people should know about in Canada?
So obviously there's a lot of different asset classes out there. The main ones you'll see are, stock market investing. So you've got bonds, you got stocks, but then also there's funds that are a mixture of those. So you got like mutual funds, segregated funds, which are more of an insurance product. And anyways, there's exchange traded funds, ETFs. Then there's also real estate, there's commodities, there's a lot of different things out there. But in general, when we're talking about investing, we're pretty much talking about stocks, bonds, and different fund types.
Index funds as well.
Here's the thing, just a little side thing about index funds. So that's like a buzzword. We hear index funds a lot. So they can actually be categorized as either a mutual fund or an ETF. So when you're talking about index funds, really important to know which product are we talking about, an index mutual fund or an index ETF?
See, that's what we're talking about, the expert. So some of the misconception about investing is like the risk, because sometimes people feel like, oh my gosh, I don't know if I'm investing in the right thing. What's the risk that comes with it? But I always tell people, like, with every risk, there's a reward. And the higher your risk, the higher your reward as well. So what would you say are the common risk type that people that are investing would see whenever they decide to start investing?
So there are lots of different types of investment risk, and every type of investment has some level of a risk. So there's no such thing as like a completely risk-free investment. That's really important. Like even cash, people are like, oh no, I'll just put my cash. There's inflation risk, right? So there's lots of different types of risk, but the main two that are really important to know about is systemic risk and non-systemic risk. And so systemic risk, also known as market risk, that is something that you can't really do anything about. That's just like you taking the jump, the leap into the market. There's going to be things and variables that you just cannot control. So that is kind of just the overall risk of being invested in the market. Now, non-systemic risk is something that you can actually do something about. So that is risk by investing in certain companies or sectors or industries, and you can kind of lower your non-systemic risk in your portfolio just by having a diversified portfolio. So don't just invest in tech stocks. That is quite risky, but you can invest in tech stocks and maybe some bank stocks and some, utilities, gas companies, whatever. If you make sure you're kind of putting your eggs in lots of different baskets, then you're going to lower your risk if there is, something big that happens in the tech sector where all of those companies, their stocks are, going down. Well, you're going to be kind of okay because you've got stocks somewhere else. So those are really two important things to remember.
So basically, you're spreading your risk across different kind of investment to make sure your portfolio is diversified. And I guess with time as well, any kind of risk that you're getting, you can spread it over a long period of time.
Yeah.
And that would also help your portfolio overall.
Exactly. Like the longer you're invested, the more time you have to kind of recover from those ups and downs. And, we're kind of seeing that right now. We've seen a lot of ups and downs for the past 3 years. And the best thing you can do is to just stay invested, have a specific plan that you're following with a, you know, strategy, and to not, you know, freak out, because that is how you lose your money, by freaking out. You're like, this is too risky. You're like, the risk actually didn't change. This was just the downside. We only sometimes think about the upside.
Yeah. I think that's very common with most people when they're investing. They only think your money would always grow. And one day you log into your portfolio and you see it's in red, it's minus, and you're like,
oh
my God, what should I do? So at that moment, you have to know that that's very normal when you're investing, and these things do happen. With time, you can correct the kind of losses or downturns that you would have experienced with your portfolio. And like she mentioned, systematic risk and non-systematic risk, you can calculate and make sure that you're planning your portfolio properly. So I also know that in Canada, we have like registered accounts and non-registered accounts. Like that's the TFSA and RRSP, RESP and whatnot. And people do talk about using this type of accounts for investing, but not a lot of people know the benefits or the value that you could get from using such accounts to invest. So can you just kind of like highlight some of the benefits that would come with using like your RRSP, for example?
Yeah, so with the registered accounts, which they're registered with the government, they have certain tax benefits. They are great because there's so many ways that you can save money in terms of how much tax you're owing. TFSAs are one of my favorite things to talk about because they're called tax-free savings accounts. Most people think it's a savings account you can only put cash in. They're a great vehicle to build your wealth through investing because what you put in there, whatever grows, if you earn interest, dividends, or capital gains, tax-free. And also you're not penalized, you don't get taxed when you take that money out. So this is a great vehicle to grow your wealth for retirement or even a shorter term goal like buying a home. Your RRSP works a bit differently. You get that tax deduction for all your contributions, but you're basically just deferring tax. So it's not tax-free, and a lot of people think it is. But when you're in retirement, you're drawing down that RRSP, or you've converted it to a RIF, you do get taxed on that money. But the logic is you're going to be contributing to your RRSP during your higher income earning years. And when you're in retirement, you're going to be in a lower tax bracket. So you're going to be paying less tax when you take it out. And again, if you are smart, you get like, you know, your tax deductions, and maybe you get a tax refund when filing your taxes. If you then reinvest that tax refund, it'll just continue to compound and grow. Yeah.
That makes a lot of sense, totally. In Canada, we are all worried about paying a lot of taxes because in Canada, we actually pay very high taxes. So using your registered accounts are great ways to save tax money and still enjoy the benefit that comes with investing, which is building wealth. So let's say, for example, I'm a newbie, I'm a beginner to investing, because we've been talking about all of these things, and some of my viewers there are probably newbies and just decided from this video onward, I want to start investing. How would you advise them to get started, pick a platform, choose a stock, you know, all of this thing? How do they get into it?
Yeah, it's an overwhelming task to figure out, how do I want, you know, everyone's like, start investing. You're like, okay, but how though? There's so many different ways. I say the first thing that you really want to do is decide what investing strategy you want to follow. And I say that because there's mainly two categories. There's active versus passive. Within active, there's lots of subcategories. Passive is very, you know, simple, straightforward. Like we talked about index funds, that is what passive investing is all about. And so if you choose that path, and that's kind of the path I chose, then your options are, you can of course work with an advisor and then specifically ask, I want to be in a portfolio of index funds, or you can use a robo-advisor online platform. They've got these pre-built portfolios, very easy to use, or you can go self-directed, open up a discount brokerage account, and then you can buy your own index ETFs and do it from scratch by yourself. Now, if you wanted to do more active investing, you would either, again, you can use an advisor or a wealth management firm and build your portfolio that way, and then they would still be in charge of managing it. Or you can do your own thing, self-directed, buy your own ETFs, your own stocks, manage it your own. So those are kind of like the two ways to get started. Yeah.
Okay, that's great. How about like choosing a brokerage? Like what do people look out for when choosing the brokerage?
I'd say the biggest thing, especially when it comes to like a robo-advisor or a discount brokerage, is number one, fees. That's kind of the main thing, right? It's like we want to find one that has the lowest fees or no fees. Like if you're, you know, want to buy stocks or ETFs, what's one that has no trading commissions? Because those can eat up, you know, your
pretty
returns.
Fast, over
really.
Time.
Yeah, some of these, you know, brokerages charge $10 per trade. That's a lot of money if you're doing a lot of trades, right? Yeah. And same with a robo-advisor. In general, their fees are pretty comparable. I think they're pretty much all the same. So the thing for that, you'd really want to take a look at what's the platform like, the user experience experience? What are reviews? What's their customer service like? And I think you can really do that for any discount brokerage too, is do people like this? Are they, if I have a question, is the platform responsive? Like, you don't want to sign up, put all your money somewhere, and then you have a question or you need help or support and no one is getting back to you.
Yeah. And what kind of portfolio do you do? Do you do the self-directed or robo, or do you do both?
So I started, I've done it all, but when I was in my 20s, I used an advisor. And then I moved over to robo-advisor investing, did that for a number of years, and now I'm completely self-directed.
Oh,
so,
wow.
Yeah.
That takes a lot of experience. Like, you need a lot of experience and knowledge to be able to do that, because my portfolio that I self-direct, it's like in negative right now.
Yeah, so
I'm not sure.
It's not you, it's the market. Depending on what your portfolio is comprised of, it's not always you.
Yeah, well, there's that one, and some of the stocks got delisted, so.
Oh, yeah, that might be, that's unfortunate. But you know what? I always say it's, we kind of, are hard on ourselves, be like, oh my gosh, that was such a dumb mistake. You know what? That is sometimes just a price you pay to have a learning lesson. That's what I always say. Because believe me, I've bought stocks that never came back up. And you're like, that was an expensive lesson, but you know what? I'm going to learn from that and not make the same mistake moving forward.
Absolutely. For beginners, I always recommend to go the robo-advisor way. Over time, you can learn and see what kind of stock you want to invest in personally long term. That would be my own personal approach. I actually started off with mutual funds.
Yeah, me too.
Using an advisor. Then I did self-directed. Then now I'm doing both. There are some companies that I truly believe in the value that they will give long term, so I just buy those stocks. Then for my main portfolio, I just use the robo-advisor. And just in case you're not familiar with robo-advisor, it's just you. Do you want to explain that?
It's really simple. It's all online, which is really easy to use. And all you do is, you sign up, or even before you sign up and commit, you go through what's called like an investor questionnaire. They ask you a bunch of important questions about what's your goal, your timeline, all that kind of stuff. And then based off those answers, and also like your risk tolerance, how comfortable are you taking risk? And then they suggest this is probably the appropriate portfolio for you. And then you invest in it. And it is a portfolio of index ETFs. And all you have to do is contribute, but they take care of, managing it, rebalancing your portfolio, investing the cash, and whenever you earn like interest or dividends, they reinvest that for you. So it's really hands-off. And I agree, it's a great way to get started investing if you are a beginner.
Thank you very much. I feel like you've pretty much covered all the important things that any beginner out there needs to know to get into investing. And even if you're not a newbie, you're already into investing, I'm pretty sure that you would have learned a couple of things in this video. So thank you very much.
Thank you.
Okay, with that said, if you have any questions, please feel free to leave them below in the comment section. Go ahead and check out Jessica's channel. She's a YouTuber. She makes great podcasts. I've been on a podcast as well.
Yeah,
it was really nice chatting with you that time. So yeah, go check out Jessica's channel, and we'll also be filming a video on her channel. I'll leave the video in the description, so go check it out. Check out her Instagram, and I'll see you all in another video. Bye for now.